REXIT in June, old currencies out in November, a new telecom company debuted in August, monetary policy saw a sea change, and so did the boardrooms at Tata Group. FY17 was a tectonic year in India's economic calendar. Good evening and welcome to this special broadcast, FY17, a report card. I'm Lata Venkatesh. Over the next 30 minutes, we take you through the key events that shaped the year that was. Let's start with the economy. Safe to say it was a challenging year. Path-breaking changes in monetary and fiscal policy making were put in place with the establishment of the Monetary Policy Committee and the passing of the One National Goods and Services Tax for the country. Here's a report.
और 1000 रुपए की करेंसी नोट ये मुद्राएं कानूनन मान्य होगी.
Looking back, it started as a cataclysmic year. The first salvo came in June when Raghuram Rajan said he won't continue in RBI at the end of his 3-year term.
As we started the bank cleanup, I saw there were some things which would require perhaps at least waiting and watching and being ready to react for a little while longer. Similarly, with the Monetary Policy Committee, maybe a couple of meetings to see it going on would have been useful.
You just said in your letter to your employees that I would have liked to see these processes complete.
Yes.
So it appeared that you wanted...
I was open for staying a little while longer to see them complete, but at the same time, I was perfectly happy to go.
Rajan is, before I talk negatively about central bankers, but he's at least one who understands the problems. He's probably the best central banker in the world.
But the bigger change at RBI was the way in which monetary policy has come to be made. FY17 saw the coming into existence of a 6-member Monetary Policy Committee, including 3 independent external members appointed by the government. The RBI formally became an inflation-targeting central bank, and the MPC was set a target of 4% CPI by 2020.
The Act and the consequent 4 plus or minus 2 is what we have to endeavor for. In fact, if you read our March 2015 statement, that also makes that very clear.
The other big seismic shift was in the fisc. The year saw the setting up of a truly federal body in the GST Council, where every state has one vote. The council, together with the states and the centre, succeeded in bringing all of India under one goods and services tax.
We are virtually seeing history in the making because we are now going to be transforming into a new system of indirect taxation.
बहनों और भाइयों, देश को भ्रष्टाचार और काले धन रूपी दिमक से मुक्त कराने के लिए एक और सख्त कदम उठाना जरूरी है.
The high point of the year was that these massive policy resets came in the midst of a shocking demonetization policy announced suddenly by the government on November 8th.
8 नवंबर 2016 की रात्रि को 12 बजे से वर्तमान में जारी 500 रुपए और 1000 रुपए के करेंसी नोट लीगल टेंडर नहीं रहेंगे.
In 7 weeks, citizens had to exchange 15.4 trillion of old 1,000 and 500 rupee notes for new ones. Running short of new notes, the Reserve Bank imposed limits on how much cash depositors could withdraw. Just 2,000 rupees from ATMs and 20,000 rupees from bank branches. Rules had to be changed many times over, and it was only in mid-March that all withdrawal limits were removed. The note ban led to steep falls in sales of small consumption items, hurt small cash and labor-intensive businesses. But in the end, it didn't show up so much in the GDP numbers. In fact, FY17 turned out to be the year when India's macros actually were at their best. Inflation and fiscal deficit were at their lowest since 2009. Current account deficit was just 1% of GDP. Rupee at the highest in 18 months, and growth rate better than all big economies. For the economy, FY17 was the year of the big reset. Monetary policy was reset to target inflation with GST and with government linking PAN cards to Aadhaar. FY17 may well go down in history as the year which may have permanently expanded India's tax base, India's tax to GDP ratio. Meanwhile, the financial year FY17 saw quite a few corporate battles also being waged. Some of the biggest ones included the standoff between Tata Sons and Docomo over put and call options, pharma giant Daiichi Sankyo and Ranbaxy founders, the Singh brothers, disagreed over disclosures made during the sale of Ranbaxy, and electronic payment services company Paytm and MobiKwik went toe-to-toe over advertisements. But there were two battles that grabbed the headlines globally. One was the internal boardroom battle at Tata Sons between Ratan Tata and Cyrus Mistry, and the other was a difference of opinion between the founders of tech giant Infosys and its current management and board. CNBC-TV18's Kritika Saxena breaks down these two disputes.
Expect the unexpected. That pretty much sums up corporate India's FY17 story. From outright insults to polite taunts, FY17 saw it all. But the one battle that eclipsed all others was the battle for control of India's largest conglomerate, Tata Sons. For watchers, it began on the 24th of October with a quiet press release. Pandemonium followed.
Break the Tata story now. Just put Kritika on the line. Quickly.
This is sensational.
You know, Lata, it's a press release. I'm not able to believe it. At the heart of this issue was a loss of trust by Tata Sons' principal shareholder, Tata Trust. Serious questions were raised on corporate governance, the role that Tata Trust plays in the running of India's largest corporate house. Tata Sons refused to reverse their decision, and Cyrus Mistry fought back with serious allegations against Tata Sons, Ratan Tata and numerous Tata loyalists.
Within hours, battle lines were drawn, and the 4 months that followed saw almost daily doses of allegations and counter-allegations from both sides. A slew of board meetings and extraordinary general meetings at many Tata Group companies that sought to remove Cyrus Mistry as both chairman and director. Never mind that his family holdings hold a sizable 18% stake in Tata Sons, which guarantees them a place on the board. Through this, Ratan Tata remained adamant that neither he nor his Tata groups will yield an inch to Mistry.
I think the truth will prevail, whatever the process may be, however painful it may be, the truth will prevail.
With Tata Group companies looking set to oust Mistry, he changed tactics and abruptly shifted the battleground.
I have decided to shift from the forum of EGMs to a larger platform, and also one where the rule of law and equity is upheld.
This courtroom battle is still raging on. Though the Tata Sons boardroom now has a new chairman in former TCS CEO N. Chandrasekharan, and investor concerns about stability at the group and perceived corporate governance lapses have been allayed. Speaking of perceived lapses in corporate governance, IT giant Infosys also found itself in the spotlight. But while this disagreement was as surprising as the Tata Mistry battle, it wasn't as bloody.
At the heart of this dispute between the Infosys founders and the current management, which CNBC-TV18 uncovered, was three key issues: the remuneration of a few former executives, the compensation of current executives, namely the CEO Vishal Sikka, and the inaction of management for using the significant cash pile in a manner which will unlock value for investors.
What concerns some of us, particularly the founders and senior former Infosians, is that there have been certain acts of governance that could have been better.
Okay, give me some examples.
For example, paying the former CFO a 30 months severance pay.
And here in this case, the founders as shareholders, as people who build the company, people who sacrifice much, who had a great value system, are saying that the board has not come up to the high standard they expect in corporate governance and many issues, especially on what was paid to the former CFO and the compensation issues. What do they get by keeping cash in the balance sheet? Infy's market value is 2,11,000 crores. They got 40,000 crores, 20%.
But in this case, the entire Infosys board stood united. And in sharp contrast to the silence that enveloped the Tata mystery battle, decided on a 4-hour press conference to clear the air.
Here we have a situation where you have some stakeholders, the founders and others along with them, who have nothing other than the best interest of the organization in their mind. And obviously there will be a lot of passion. We have already got all our KMP contracts based on the benchmark study that we made, and a civilian space therefore linked to that. Therefore there is a certainty. There will be no more Rajiv Bansal for you now to write on.
Taking a distinguished company like mine and elevating it towards an innovative company at a massive scale, that is quite a challenging and a fun endeavor, and that's what more than anything else drives me.
So, Vishal Sikka, are you here to stay?
Absolutely. I'm a Kshatriya warrior.
2 weeks later, the company also acted on the question of a large unused cash pile and said the board will meet in FY18 to consider a share buyback.
These two boardroom battles may have cooled down considerably, but the battles themselves are simmering, and they have raised serious questions about the level of corporate governance in corporate India. In Mumbai, Kritika Saxena.
So that was India Inc. and the differences in duels that made headlines in FY17. But what about Dalal Street? Indian markets are ending FY17 on a high amidst global and domestic headwinds. Anuj Singhal is joining us with more perspective. Anuj, this is one year that the markets would certainly cheer, won't they?
Well, what a good year for the market this was. It started with a bit of a despair, but after that it ended on euphoria. The Sensex started at 25,000, in between went to 24,500, but ended close to 30,000. And this market this year was all about resilience. The market absorbed REXIT, as we call it, BREXIT, Donald Trump and demonetization being announced on same day. So a lot of negative news was absorbed. Classical copybook stuff of a bull market climbing wall of worries and bad events being used to actually add to your portfolios. The other big talking point was, especially post demonetization, the big DII buying, which really trumped FII selling. We had 30,000 crores of FII selling. That was matched dollar for dollar and more actually, 35,000 crores of buying by DIIs, and the market went up 12% in this period. Most heartening bit of trade. The laggards of last year were leaders this year. So metals in particular, PSU banks, both these indices had big gains. In fact, Vedanta was up 200% and Hindalco was up 100%. On the other hand, Sun Pharma and Infosys, the poster boys of earlier bull market, were actually down this year. But the money was made in mid-caps. Portfolios made money. Mid-cap index was up 41%, more than that actually, 34% rather. And small-cap index was up about 42%. So all in all, great year for stock investors. And once again, the lesson was simple. Buy the dips and buy bad news.
Thanks, Anuj. With that, it's time for us to take a break. But up next, we shift our focus to Deal Street. We decode the top 5 deals of the year for you. What else? We will also take a bird's eye view of the telecom sector.